Hello everyone, welcome to 2026. Wishing you all a warm and prosperous new year. As we turn into new year, I would want to take a look at what has transpired in the last 1 year and give you a sense of where the markets are headed from here on. So this is a regular monthly recap video where I'd be seeing the frontline indices, how are they performing, what are the some sectors that are doing well, what are the factors that are doing well, and are there any specific asset classes which are doing well. I'll be showing you in this session. And going forward, I'll also be showing you a brief about how our small cases are performing. We have two strategies. One is a dual momentum strategy and other is an adaptive asset allocation strategy. I'll tell you where you can track our strategies and how can you subscribe, so that if anyone is not aware of these small cases, they can take a look at our strategies. So let's begin our today's session. So if you look at the frontline index of India, which is Nifty 50, which comprises of the top 50 stocks by the market cap in India, you notice that this particular index has been struggling to break out from the levels of 26,250, and it is stuck since last 1 month. When we showed the last 1 month's in the previous month's monthly review, we noticed that it is at the same level, unable to move further up, and even after 1 month, it is still forming a very tight or a narrow base in that region. It has to be seen whether it can break out from these levels of 26,250, which is very critical to watch, and it moves into a decisive breakout. Now, the key things to monitor in the month of January are a lot of companies are going to publish their earnings results of Q3, and we need to take a cue from these. And I think the markets are waiting for the results to be announced to take the next stance. Apart from that, the India-US trade talks are also lingering. I think that is also something which markets are waiting for to get some clarity. So these two being the major issues or major events to be tracked in the month of January. Now, if you notice the breadth, which is the number of stocks which are above 200-day EMA and number of stocks which are less than or below 200-day EMA, we are still in the same ratio of 50%, meaning half the market is doing well and half the market is not doing well. This is a typical scenario where the markets are undecisive in nature, and hence we are seeing a flat or a sideways trend continuing in the last 1 month. Now, if you notice the sectors which are doing well, I've come across a couple of sectors which have already done well. I'll show you those sectors. Firstly, the sector that I really like is PSU Banks. PSU Banks have been doing phenomenally well. In the last 1 year, they've given returns of 36%. For the last 6 months, they've given returns of 24%. Even just in the last 1 month, they have given returns of 16%. So PSU Banks are something which are really to look out. And I'd be planning to publish a sector-specific report about PSU Banks shortly. That will be our first report that we're going to publish as a SEBI registered research analyst entity. So please take a look at it. And if you want to get these reports directly to your email, please subscribe to your newsletter. I'll be posting the link in the YouTube description. The second sector which we are gung-ho about is the Nifty Metals. The Nifty Metals, as expectedly, because of the uncertainty in the overall equity asset class, the metals have risen. Not just the precious metals like gold and silver and platinum, but also the basic metals also have been rising, like copper, steel, etc. So we see that the metal sector has given phenomenal returns of 34% in the last 1 year and around 11% in the last 1 month itself. The other sector that we are seemingly we are liking is the auto sector, which has done reasonably well in the last 1 year. It has given a returns of 21% in the last 1 year and around 7.5% in the last 1 month. This I'm attributing it to the reason for the GST bonanza, which was announced by the government in the month of October, November. So a lot of sales had been pushed into the auto sector. So that is something to watch out for. Apart from the Q3 results and the India-US trade talks, the GST results, which the GST benefits which most of the consumer facing companies have accrued, these we'll be noticing in the Q3 earnings result. So that will be another trigger to watch. How is the GST helping our consumption story? Now, having talked about the frontline index Nifty 50 and the sectors, now let's take a look at the factors, how have they done. Out of the 5 factors, in the last 1 year, if any one particular factor that has stood out, it is the low vol. Let me show you the chart of low vol. When I say by low vol, it is Nifty 100, low vol 30. Now, if you notice, the Nifty 100 low vol 30 is almost close to its previous all-time high, which was at 21,650 during the September of 2024. Now it is just 2% away from its previous all-time high. Now, if you notice the other indices, let's say like momentum, they are way far off from the previous all-time highs. They're almost close to 17% from the previous all-time highs. Even that's the case with alpha. The other good sector that I like is also the quality and value sectors. These have decently done well, not as great as momentum. But the momentum, if you notice a particular pattern, can be seen. So whenever the correction happens in momentum, it undergoes a volatility contraction pattern, but it not in a straight or a horizontal level, but in a slightly slanting fashion. I think that's a similar kind of pattern that even observing even now also. Now, having said that, momentum has been recently been rebalanced in the month of December, so we can expect the new stocks to start their journey in the month of January. So we'll have to see how this performs, the momentum strategy performs from here on. That's broadly about the factors and the sectors. Now let's take a look at the fundamental numbers, which are the earnings and the valuations. So for valuations, as I mentioned last time also, I usually track CAPE numbers or cyclically adjusted PE ratios. These PE ratios are normalized for the past decade's inflation, thereby giving you apple to apple comparison across the different time periods. Now, if you see the Nifty 500 CAPE ratio, these are elevated. They are plus 1 sigma standard deviation away from the mean levels, which is a concerning number. But we have to see how will it unfold, because this is a new uncharted territory for the valuations of India, and especially in the growth economies like India. They do have higher valuations, and these level of valuations were seen back in 2008, 2007 bull run onwards. Whether India can sustain these level of elevated valuations can only be seen by the earning results. If there is earnings momentum, then definitely these kind of valuations are justified. So quite excited about the Q3 results of 2025. So we'll be tracking closely how the earnings pan out and be publishing some interesting reports on which sectors are doing well. Now, if you see the CAPE ratios of BSE Sensex, which has even longer territory, the story is the same. We see that the valuations are elevated and they are above 1 sigma deviation from the historical mean. So that is about the last month's performance in terms of the equity market. Now, before I leave, I wanted to show one last chart that which everyone is aware of and everyone is talking about. That is silver. Now, silver has a very unique chart pattern. Let me show you the monthly graph so you can visualize a much longer period of time. Silver is a very volatile asset, unlike gold, which is lesser volatile, is a continuously moving asset class, and it only seldom undergoes a time correction and again continues to rise up. Silver is not like that. Silver has a lot of cyclicality in it. So if you notice the chart, the levels of $50 per ounce of silver were seen only twice in the history so far. One during 1979, the oil embargo, US oil embargo in Iran. Second, in the 2011, after the taper tantrum. So these two were the peaks of silver. Now we have seen the silver's level again during the 2025 October-November periods. But one good thing is that this is not a one-time phenomena, because we have seen that it has handsomely beaten and overtaken the levels of $50 per ounce. And right now, as we speak, in the month of January 2026, we are already 60% or 67% above the previous all-time high. This is not retesting. This is a clean breakout of silver that we are noticing. And if you zoom in and see the candles of the last 3 months, these are the 3 white soldiers. That's the pattern that you call when you see 3 continuous consecutive green candles. And silver shows no signs of slowing down. But again, it is a volatile asset class. So have it according to your particular specific risk appetite, and please consult SEBI registered investment advisor for any kind of investment decisions. Now, this is about the markets. Let me show you about our small case strategies. Where do you find? You can find our strategies on factorlab.smallcase.com, and that's where we have listed our 2 strategies. We have 2. One is adaptive asset allocation, and the second is dual momentum quant. The minimum investment in adaptive asset allocation is 1 lakh, whereas in dual momentum quant it is 2.3 lakh. Adaptive asset allocation is a ETF only strategy. We only have 4 or 5 ETFs and not more than that. These are factor based ETFs plus debt and plus gold. So there will be a rotation amongst these ETFs based on the momentum and volatility. Then dual momentum quant is a stock specific momentum strategy. So we first see which asset class is in momentum, and then we double click and select stocks within that specific asset class. Let's say large cap, small cap, mid cap, gold, debt, etc. Now if you want to notice the performance, you can click on a specific strategy and click on unlock and continue. You would be able to see the performance of our strategies. The yellow colored one is an equity multi-cap, and blue colored one is our strategy. So you can, this is how you can compare, if you want to compare how our strategies have been performing vis-a-vis the benchmarks. So same way you can go to the dual momentum and see how is it performing. You can see the blue colored one and the yellow colored one to get a sense of how the strategies are performing. You can, if you want to read more about it, you can click on read more and see what is our approach, how do we select a particular asset class, how do we select a stock, and when do we exit, when do we enter. All the details have been mentioned. For a detailed reading, you can click on either methodology or fact sheet, and you'll be able to know our strategies approach in detail. Now with regards to pricing, our adaptive asset allocation strategy starts from 541 rupees a month, and the dual momentum strategy starts at 1032 rupees a month. So we have a 3-month subscription plan as well as a 1-year subscription plan. That's all for this monthly edition, guys. Have a happy new year once again, and see you next time again with a new research report.